Good morning, everyone. I'm Vince Lancy, and in today's morning meeting, we're going to talk about what happened last night in the Middle East. Premium will include initial reactions by bank trading desks as released last night, and then some market driving news. Let's take a look at the markets first, though. Gold is down 278 after being up significantly last night. That's a 2-hour chart I'm leaving up there to give you some perspective. All this is the area where all the news happened last night. I'll leave that there. Silver is down 2 cents at 28.18. Copper is up 3.5 cents at 4.45. Oil is down 69 cents. Take a look at that for some perspective. All right, that's your oil 2-hour chart. Natural gas is 171, unchanged. Bitcoin is up 2.4%, but that's after being down. So we have basically a dive and a recapture. We're going to touch on all these markets again. Ethereum 3160 up 1% plus. Palladium 1002 down $21. Platinum 927 down 6 and change. All grains are up, led by wheat at 553 up 6 cents. Corn is at 423 up 3 cents, and soybeans are 1136 up a little less than 3 cents. The dollar, which I didn't start with, is down 8.5. 10-year yields are 459, down 4 basis points almost. The S&P 500 is down 7 handles, and the VIX is 1886. All right. Let's go through what happened last night and try and be as factual as possible. But, I'm going to inject a comment or two. All right, so tentatively titled Israel attacks, counterattacks, reattacks, however you want to look at it. Iran. Let's go through it. Here we go. Here's the front page. We sent this out to the founders this morning. It's largely going to be this analysis with a couple other things, but that was sent out. Top mainstream media news was sent out. That's just headlines and links. And there's yesterday's post at the end of the day. All right, here we go. In the premium, we have Citibank, believe it or not. We have Goldman. And we have MUFG, which has actually been putting out some really good stuff lately. Let's get to us. So let's start with what you would think about if you were trying to figure out what was going on quickly. What happened last night? Israel retaliated by hitting an Iranian military base with drones, apparently. All this is reportedly, right? How bad was it? Well, it's a secondary target, primarily housing F-14 Tomcats. The attack was reportedly weak, and it was done by drones, which makes sense because it's a 2-hour head start to get from Israel to Iran with the military bases, et cetera, et cetera. Market reactions. The market started with your typical geopolitical panic selling, and it was pronounced. It wasn't muted in oil and gold. Then recovery as things seemed to be playing out as this was another kabuki theater attack. My words. Iran's response, Iran has no plans to strike Israel back immediately, Reuters reports, citing a senior Iranian official. What was weird? It was weird. Weird in the context of Middle Eastern conflict, but consistent with what happened the other night. I'm telling you, this is just not normal stuff. All the initial reports we noticed of the Israeli strike came out of Western news sources, not Iranian condemning the attack, not Israeli saying we attacked them, Western. And more than one person has noted that that the Biden administration somehow let it out that Israel was attacking. I don't know how to take that, but all right. But the conclusion, if that's true, if my observation is valid, is Iran may have been seeking to minimize this, and the U.S. may have made sure it was broadcast. To what ends, I don't know. I will say that normally I can funnel stuff into narrower and narrower areas, but there's some wild cards here right now. The intersection between geopolitical and political is becoming rather painful. So, if the US leaked it, why would they? Right? If Israel attacked, why would they attack an F-14 Tomcat base with drones? Not to saying that drones can't do damage. Why would Iran minimize it? And at first, they actually said it was like a domestic explosion, nothing to do with an attack. I mean, there's just a lot of falsity going on here. I'm not sure what it is, but let's go through the markets itself. At least we can see how the markets perceived it. Starting with the dollar, first arrow is the news. The second arrow is the retracement. Right, so the market. Well, you can see what happened there. Flight to safety, and then backing off of that. 10-year yields dropped as people went to bonds, and then slowly came back. The S&P 500 dove and recovered. Gold spiked and went back to unchanged. So far, the pattern is classic flight to safety in the Middle East with relatively violent, quick retracements. Notice that gold is essentially unchanged now, at least on that chart. Silver, same thing. Suggests, by the way, silver doesn't usually spike right away. Suggests that there are shorts in silver who covered, or idiots who bought because gold was up. Oil, nice strong spike, and worked its way down the rest of the day, rest of the night. These are 15-minute charts, by the way. Let's take a look at the dollar if I didn't have that up there. So there's the dollar on your 2-hour. Here's the dollar last night. Pretty muted, right? 10-year yield, boom, back. Okay, so conclusion. Conclusion is, as a trader, well, first of all, let's start geopolitically. Geopolitically, the mainstream media is going to say this happened. We're not sure if there's going to be a retaliation by Iran. The hot take financial people like myself will say, will probably come to the conclusion that it was a muted political response to hold on, let me just mute this here. There you go. It was a muted political response for Netanyahu to save face. A lot of face-saving stuff going on here. The next take is, I find myself less certain now than before. Not because it was muted, because I don't know why it was muted. Okay, so, I feel like we're being led down a numbing corridor. Oh, it's kabuki. Oh, it's just muted. It feels like, oh, it's just a local nuclear bomb. Anyway, you get the point. The point is we're normalizing war. It's like Grand Theft Auto now. Okay, market news. The U.S. stock market, U.S. housing market is coming under renewed pressure, buffeted by mortgage rates that rose above 7%. Fine. Netflix said in its first quarter shareholder letter it will stop reporting quarterly subscriber gains. Why? Always ask why. And I think they're probably cannibalizing their subscribers because of their crackdown on multi-users. Okay, so that's probably it. They're probably massaging numbers. Meta has released a new and less sanctimonious version of its artificial intelligence model. That's a good word, sanctimonious. Meta is going anti-woke now. You can see it also in the PR and branding that they're redoing with Zuck. Zuck is, He's a guy now. He's got a gold chain. He doesn't comb his hair. He throws spears. He does wrestling. He even curses once in a while. I'm telling you, man, it's so funny how they're all shifting to conservative, with Bezos lifting weights and having uh, 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 I guess you would call her a trophy wife. Elon Musk buying Twitter and making it a free speech platform, and Zuck now, he's a bro. It's funny. The U.S. bond market's recovery was cut short by a Federal Reserve official's mere mention of the possibility of an interest rate increase. Stock portfolios at large pension funds had a blockbuster run. Now managers are cashing out. That's key. If you're a conspiratorial person in terms of markets like I am, you look at that and you say, this rally in the stock market was more or less insured to make sure pensions had an exit. I've seen this before in oil. They will get the Saudis to pump oil before an invasion. So it's kind of like letting the market rally so pensions can be liquid again before whatever bad news comes out. And there's been no bad news yet. All right. What do we have? Data today. We've got Chicago Fed President Austin Goolsbee. We have other stuff too, though, right? No, that's it today. Light day, light data day. What do I think about that? Oh, let's go to gold. Let's go to gold and silver. I'll show you why. I've been looking at the charts, and let's get rid of this line here. All right. See these lines here? I want you to look at it like this. This is the market being happy, meaning it doesn't know what it's worth, but nobody really cares in this range, which is a nice little range there, 2350 to 2400, right? This is the market searching, testing for interest, whether it be buy or sell, you don't know. And this is the market testing for interest. So in here, it's a volatile but sleepy range in terms of the players. Everyone's patient. Buyers are waiting, sellers are waiting. Up here, sellers get interested, maybe, and buyers get interested, maybe. Down here, sellers get interested and buyers get interested. That's it. Let's move to silver. Give you some framework on how to look at these markets for the next day. There's the comfort zone, right? As tentative as it is. And there's the extreme. So here's your comfort zone. Up. Silver's actually easier to see. Up, down, up, down, up, down, up, down. You can see this is coiling. You could say, oh, we're going to have a big move afterwards. It's very possible. But we could also just expand inside the range here. But below here, by the way, these are the same equivalent levels in gold. Below here, you attract buying, you attract selling, then buying. Okay. Above here, well, we've only been above here once, and you attracted buying, significant buying, a pause, and then selling. Down here, you're getting buying. So overall, this chart is slightly bullish. Oil. Look, if I were trading this today, I mean, and I might actually trade it today, I think precious metals could be very interesting from this respect. After a move, let me get rid of these. After a move like we saw last night, people piled in long, right? Oh, the end of the world's not coming, let's get out. You would tend to think in any market, not just gold, the market should go the other way now. It should overreact lower. I'll go to 15-minute chart again, right? It should, boom, get out. It should overreact lower. I would bet on it because the market has to kind of rebalance it. All the idiots that bought up here have to sell down here, metaphorical idiots. So by rights, you should be bearish gold. You should be bearish silver. If they don't go down today, then that tells you this buying here, they're not idiots. There's a lot more buying that they have under here, and they just bought a little bit above. Okay? So I'm saying is this market, by all rights, should tank. And if it doesn't tank, that tells you that there's still a lot of buying out there right underneath this market. Bitcoin's actually easier to see that in a reverse way. You ready? Bitcoin sold off and then bounced to unchanged. Well, this market should rally because someone sold it in the hole. The news turns out to not be a problem back to here. And now the algo is, this is an algo. The algo is buying this. Okay, so this is a market I think that's set to have a nice pop. Gold should sell off. It should sell off. But if it doesn't, then the real buying in gold hasn't shown its hand yet. I'm Vince. Have a great day and a great weekend.